Alright, so today, July 23rd, 2011, wanted to get down some of my thoughts regarding the state of the markets. Um, I'm going to try to do this every month just because I like to watch things from kind of a large perspective, and this will allow me to not only have some documentation of my analysis, but to also go back and take a look at it afterward and see how I might be correctly reading or misreading the charts. Anyway, so we'll start with the Dow. So the broader stock market, what I'm looking at here on this weekly chart is this massive rally here from the March 2009 lows all the way up to this area here, which is just the last few weeks. It's been an over a 2-year rally. It's been a really good run. Looks to me like the market wanted to break down right here. It rallied substantially to the 11.2 area, the 11,200 area, and it looks like it wanted to break down. And this is when this was in the area of Bernanke's Jackson Hole speech where he announced QE2. The market, smarter than to fight the Fed, takes off here, right? Seems to make a lot of sense. Now, what I'm looking at though is this trend line. This trend line, I think the whole world is watching. It's an incredibly important technical level. And we've managed to stay above it. We actually just retested it about a month ago. And we were able to hold, but it's not a real convincing run up off of that hold. We might get a big bounce here. Can't rule it out, but it doesn't look terribly convincing. And when I look here, I'm looking at the chart pattern here. You see a big decline here, a big waterfall decline going into March of 08. Now, I'm sorry, March of 09. And I see really one of my favorite indicators here, the MACD histogram. I'm looking at these vertical red bars for the histogram. Now, the market price makes a low here, and the indicator makes a low as well here. The market rallies slightly to this moving average line here, and then collapses again to a much lower price low. However, if you look at the MACD histogram low, it's actually higher than this low here. So price makes a low and then a lower low, and the MACD histogram makes a low but a substantially higher low. And this bullish divergence is I like to follow it because it's a good sign of what's going on in the market outside of price, outside of that there seems to indicate there's a lot of buying here, and the market isn't as weak as it looks. Clearly it wasn't. It went to take off here, and actually from the lows here of 66 and change all the way up at 12, the most recent high of what's that, 12,850, somewhere in that range. Now what I'm looking at here is this move right here up. I mean, this is a pretty good rally right here, and you get this bump in the MACD histogram. Now if you look, well, here I'll zoom. I'll take some of the bigger moves off the chart. All right. So what you see is the MACD breaks down in this little lull here, and then it goes to make a higher high. And when it does, it makes a really low here on the histogram. So I'm seeing some weakening here in the market. Now that's not nearly as dramatic as it was in March of 09, but it does seem to indicate that there's some sort of weakening here. And so I'm watching this trend line really closely, because if it breaks here, I think you're going to see some fireworks. I mean, it looks like the next target, obviously, it has to break this level here around what is that, 11.5. You know, it's probably got to break 11.5 before it can really move. Obviously, 11,000 is going to be a big number. All the round numbers on the way down. Maybe even here 12,000. So probably 12,000, 11.5, 11, right, before it starts to potentially fall precipitously. But it's hard to tell exactly, but I would say I'm leaning to the downside. I mean, it's clearly bullish as long as it's above that trend line. And there might be some news that comes out, some announcement of QE3, or maybe the unemployment rate drops to 3% or something like that tomorrow. It could cause us to rally again, but it's looking pretty toppy to me. It's looking toppy to me. So that's what I see in the Dow. Um, let's move on to gold. So on the gold chart here, what I'm looking at is a really clean trend. I mean, this is a weekly chart, and basically from this low back here, you know, which is in late 2008 after the credit crisis, collapse occurs, the mild period of deflation, and then it's just run so beautifully here. I mean, in this channel, you know, it goes to the top end of the channel, comes back down in the moving average, just runs right along, never violates it. Takes, you know, sometimes it gets a little overheated, goes right to the top of the channel, but always respecting that trend line, and it's just beautiful. Um, all the way up, I really don't see any signs of weakening, and it just continues to make higher highs, just on and on and on. And going into this seasonally strong period of the year, I don't see any reason for this to stop. I really don't. So bullish gold. Now, what's interesting is, you know, gold breaking out to these new highs again right now, and the Dow looking like it's weakening is here. If we look at a long-term chart of the Dow gold ratio, this is a monthly chart, so it's a very long-term chart. But what I do want to call some attention to is this period right here. Now, the Dow peaked in terms of gold, you know, back here at the end of 1999, and it's been declining basically ever since, in real terms. And what you saw is, you saw this drop about 2003, or until about the Dow gold ratio collapsed to about 21 in this area, and it made a spike low, and then it continued to consolidate, and it went into this tiny little consolidation range right here. Compared to this move, it's a really small, kind of coiling the spring, right, above 21, before it finally broke again. And it's really important to note here, when it breaks the 21 level, breaks this level, this is about 21, it breaks that level, it sharply falls, comes up to retest it, which is just fine, it's good technically, and then drops precipitously. Really fascinating sort of pattern. I think we're seeing it again here. After that large decline, made a spike low here at about 7. Then the market started to consolidate here. Or not the market, the ratio started to consolidate here. You see this downtrend line here. It's at a pivotal point right now. So what I'm looking for is, I'm looking for this trend line to hold. I'm looking for this trend line to hold, and when it breaks 7, again, just like it broke 21 here, right here, when it breaks 7, maybe in this area here, I'm looking for a collapse in the ratio. And with gold looking strong and the Dow looking weak, it seems like a pretty reasonable expectation. Um, some really interesting stuff. So if we take some scenarios of the Dow gold ratio and we were to have that drop, now it dropped from 21 to 7, which is about 66%. If it were to do a similar drop now, it would drop to a ratio of about 2.3. Now, if you're in the camp that you think gold is not going higher, so that it stays at 1600, and you trust that the Dow gold ratio is going to drop and head towards 1, then you're saying that you expect the Dow to be at 3700. If you think that the Dow can't drop to 3700 and the Dow won't drop, then you're saying that gold will go to 5454 dot 545450. That's actually a really interesting number when I slapped in my calculator, but you know, not super precise. Or they could meet somewhere in the middle. The Dow could drop to like 8150 and gold could be at a price of 3528. And if it occurs over the same time period, you're looking at like the end of 2014. And I think we're probably in a situation where that's going to be accelerating to the downside. I think these moves are going to start to accelerate, so probably before 2014. But all things being equal, you'd be looking about that time. End of the third, beginning of the fourth quarter of 2014. So all of those things seem to be in alignment. Gold is going up, the Dow appears to be weakening, and the Dow gold ratio looks poised for another drop.